Go back to the market though and just show where we are. We've mentioned some of those numbers. Stan Shamu is from IG in Melbourne, joins us now. Give us the broader backdrop. We're hovering around that 5,000 point level, Stan, on the S&P ASX 200, just above it on the All Ordinaries Index. Is it important, that level for us at the moment?
Yeah, absolutely. It certainly seems that way. Of course, yesterday we managed to briefly trade above it, but still we didn't manage to close above that level. And with confidence for investors, an actual closing high above that 5,000 level will probably be key to start seeing the market trend higher once again. Of course, we've been fairly range bound, just a fairly tight range just below that 5,000 level. It certainly seems like today the key for this session will be how the materials sector performs. Of course, the early strength was really triggered by a surprise performance in the miners. Of course, early on, some of these iron ore names were actually looking at a mildly weaker start. So they managed to edge higher with BHP and Rio climbing around that 0.5% mark, and that pushed us through that 5,000 level a little bit unconvincing, really. Just we're seeing some money come out of those iron ore names now, and that saw the market pull back into that 5,000 level. So absolutely, if we do manage to see these materials name potentially start getting some money trickle through from some of those dividends that have been coming out of certain stocks, particularly in the defensive space there, then that might help bolster some of these mining names. Of course, they look pretty depressed at the moment, but there's no hope for the gold miners today. It certainly seems like they're really dragging the materials sector as well. We've got the likes of OceanaGold dropping over 7%, Medusa Mining down around 5%, Newcrest down about 2.5%, and that's on the backdrop of that sharp drop in the precious metal overnight to about 1,575. It certainly seems that with the safe haven play a little bit out of favour, and with the US dollar regaining some of its strength in US trade, along with that Societe Generale comment that there's a bit of a gold bubble at the moment, it really will be a tough week for the precious metal. It looks increasingly bearish at the moment, and we'll probably see a lot of traders shy away from being caught out long on gold. At the same time, we just have a few sectors that continue to support and underpin the market, particularly the financials. We've seen the banks post gains of around 1%, and that has been the story of the Australian market for most of this year, whereby these banks are helping put a floor on some of the losses that are stemming from the mining sector. As a result, should we continue to see this weakness in the materials sector, it's really hard to see the market start to challenge new highs like what we're seeing in the US market, for example, where we continue to see these closing record highs, and whilst our market languishes around that 5,000 mark and is still way off its record high.
What about the regional performance at the moment? We've seen the yen open up about 0.9% and strengthening. A lot of focus very much on what the yen's going to be doing. We were talking to Ozforex before, suggestions that, look, some of the keenness on the yen's been overdone.
With most of the currency space, they've been quite relatively tight ranged early in Asia. The dollar yen's been, of course, one of the better performers over the past 24 hours. It's just a little bit of skepticism ahead of this BoJ meeting that kicks off today. You don't really want to get caught out being short on the dollar yen, considering the bold moves that we've seen already from Haruhiko Kuroda, the new BoJ governor, and the likelihood that he's likely to that he will probably announce further bold easing steps to help alleviate this deflationary phase that Japan's facing and target that 2% inflation. Of course, with the dollar yen trading around that 93 sort of 40 mark, it certainly doesn't give much confidence on exactly what the market's expecting. But we've heard increasing rhetoric that they will disappoint, but chances are no one will want to be caught out short on the pair. So we'll probably see it rally as we start hearing comments hit the wires. It generally happens throughout the meeting, right till we get the actual press conference, and maybe that's when we'll get a sell the factor fair. But for now, being short the pair is probably something that's a very risky play. We'll probably see it continue to be bid higher, to be honest. And as long as they manage to come out with an increase in their asset purchase program that's big enough to impress the market, so maybe north of 15 trillion yen, then that will probably be the key ticket to how the yen performs over the next few days. Of course, the previous governor, Shirakawa, was relatively conservative, was already targeting around 10 trillion yen in asset purchases. So as long as we can get maybe a combination of the old asset purchase program and reinforced by a new asset purchase program, then that should probably be supportive of further yen weakness and potentially see that dollar yen bid higher.
All right, Stan, look, appreciate it. Thanks very much.
Cheers.
The MWT is again under the microscope.